Good afternoon, Kim. I'm
Good
so glad
afternoon,
you
Kevin.
could show up today.
Thanks. It's good to be here, Kevin.
All right. Well, today we'll be talking about what a mortgage is, and as part of my buying seminar, and I have Kim here,
Yep.
Kim Nacchia here to talk to us about that. So,
Yep.
Kim, can you tell us a little bit about yourself?
Absolutely. So I am with New American Funding. We have 5 offices here along the Emerald Coast, and we have a wide variety of loan products for every situation. Whether you're a first-time home buyer, we have first-time home buyer down payment assistance programs. Military, we have Hometown Heroes, and that's also for frontline workers. We have good investment products for the investment buyer and second homes, as well as the FHA, VA, and conventional loans.
Okay. All right. Perfect. So this is the beginning for basically my target audience is first-time home buyers or people that don't quite understand the whole buying process yet. And so we're going to start off with a very easy question.
Okay.
Are you ready?
I'm ready.
This is a softball. What is a mortgage?
So that's a good question too. So a mortgage is a loan on a piece of real estate. It can be a lot, it could be a home, but it is a loan on real estate, and it is paid typically monthly over a certain period of years, which is called the term. So you'll have the monthly payment made up of principal, which is the actual property itself, its value, the principal, and then interest. So that principal and interest payment will be paid monthly over a period, say 30 years or 15 years or 10 years.
Okay. And I've noticed that when I punch numbers into one of these mortgage calculators, it's never what y'all say it is. It's always higher for y'all.
Now, it's not a bait and switch, but what those mortgage calculators, what they don't take into consideration are 2 other items that are typically paid with your mortgage, and that is homeowner insurance and taxes. So by the time the homeowner insurance and taxes are added on, it will add a few $100s or maybe more than that to your monthly mortgage payment.
Okay. Is it possible that I can just have my mortgage payment and then just pay separately my taxes and stuff, or do I have to put it together?
So there is the way that you do not have to include your homeowner insurance and taxes in your mortgage is if you put at least 20% down on a conventional loan. FHA will always, government loans, you will always have to include those 2
Okay.
items. Yep.
All right. So this is a term that is used a lot in your field, and let's back up again. When you're talking with a lender such as Kim here, you'll be dealing with her almost the whole buying circle process. So right now we're starting at getting an approval letter where you'll be talking with her to show proof that you can purchase the property. And so we're at the very beginning, and then we'll go search, and then we'll get back in contact with her later once we're under contract. Okay, so when we're back under contract, there's this thing called prepaids. What is that?
Yeah, so prepaids are actually those 2 items we just talked about, the homeowner insurance and taxes. So what happens when you purchase a home and let's say it's a conventional loan, you didn't put 20% down. So the lender, let's say you have a homeowner insurance policy for $1,200. That means divide that by 12 months, it's $100 a month. So the lender for the buyer will be making those payments for the borrower. So if we take the taxes and the homeowner insurance and whatever those might be for your new property, we'll divide it by 12, and then those items that is paid monthly by the lender. Now, a prepaid is what happens when you close on your new home. The lender has to have a couple months of that homeowner insurance and taxes kind of in a little bank account called an escrow. That's what the lender holds money in for your homeowner insurance and taxes. And because they're going to start paying that for you monthly, they have to have something in the bank, and that's called prepaid. So when you close on your home, you would probably be paying a couple months worth of homeowner insurance and taxes at closing, and those will be held in escrow and paid on your behalf as the year goes on.
Well, you stole my next question. What is escrow?
So an escrow is basically a bank account that the lender has to hold in your homeowner insurance funds, your taxes. In some instances, it also includes HOA fees. But then the lender holds that in their bank account in their escrow, and they pay it for you on your behalf monthly.
Okay. All right. So this is just dipping our toe in the water on learning about what a mortgage is. If you have any direct questions about any of the programs that she mentioned, you'll see that the information will be in the notes on this for contact of Kim. She's a wonderful person, by the way. And if you have any questions, you can send me a message. But if it's typically a lender question, I will say talk to your lender because she's the expert.
Hey, thank you, Kevin. Thanks a lot. I appreciate it.
All right. Thank you for joining us today.
You're very welcome.